Okay, picture this. A company like, it's been grinding it out, stock's been down for the year, and then bam, a massive stock jump just completely catches everyone off guard. Today, we're diving deep into MongoDB. We're looking at their Q2 fiscal 2026 results and, crucially, their forward guidance to figure out, well, what exactly just happened? What's behind this huge surge? All right, let's set the stage a bit. For a while now, a lot of enterprise software stocks, MongoDB included, that's MDB, right? They've been facing headwinds. I mean, before this report dropped, MDB stock was actually down 8% just this year. And if you look back 12 months, down 13%. We all remember that big AI hype rally earlier, but then reality seemed to bite for many in the sector. MongoDB was kind of caught up in that struggle too, questions about growth, profitability, you know the drill. But then came the Q2 results, and wow, the reaction was just immediate. MongoDB stock shot up more than 23% in after-hours trading, hitting 260.99 cents share. I mean, this wasn't some small gain. This is a real statement.
And it all came after they announced numbers that, and this is a quote, easily surpassed Wall Street forecasts. Really felt like a major turnaround moment.
Yeah. It really was. And the timing makes it even more significant, doesn't it? Because, like you said, there's been this cloud of skepticism hanging over software for a good chunk of the year. People were asking, can these companies keep growing? Are the models sustainable? And specifically with AI, there was even this worry that AI might actually disrupt some of these software players. MongoDB wasn't immune to that skepticism, especially after its earlier run. So for them to come out with such strong numbers and see that kind of market reaction, it really signals something important. It suggests that, okay, maybe some companies are still figuring things out, but others, like MongoDB, seem to be genuinely plugging into this AI shift profitably. They're starting to stand out, I think. It's not just hype. It looks like real traction.
That's a really good point. Standing out is key. So what was actually in those results that flipped the script so dramatically? Let's dig into the number. Okay, first up, adjusted earnings per share, EPS. For the July quarter, they reported, get this, $1 per share. Full dollar. Right. That's a 42.5% jump from a year ago. And it crushed the analyst forecast. They were expecting something like 67 cents. So a huge beat there.
A massive beat.
And it wasn't just earnings. Revenue looked great, too. Total revenue was up 24% year over year, hitting $591.4 million. Again, way above the $554 million analysts were looking for. But maybe even more telling, their subscription revenue, the recurring stuff, that jumped 23% to $572.4 million. Also comfortably beating estimates, which were around $532 million.
Exactly. And those numbers, they really let us pinpoint what's working. You mentioned subscriptions, and a huge part of that story is Atlas. That's their cloud database service, right? Yeah. Well, Atlas revenue growth actually accelerated to 29% year over year.
Accelerated, okay.
Yeah, accelerated. And here's the kicker. Atlas now represents 74%, almost 3/4 of their total Q2 revenue.
74%.
74%. So this isn't just some side product. It's become the absolute core of their business. Yeah. That shift to a high-growth, cloud-native offering is, well, it's exactly what investors want to see. Predictable, growing revenue.
Okay, so Atlas is the engine. Makes sense. What about customers? Are they bringing new people onto the platform?
Oh, absolutely. That seems to be firing on all cylinders, too. They added 2,800 new customers just in Q2. That brings their total to just under 60,000, over 59,900. And the CEO, Dev Ittycheria, he pointed out they'd added over 5,000 customers just in the first half of this fiscal year. He called it their highest ever for H1.
Highest ever. So they're not just growing revenue from existing customers, they're actively expanding their base at a record pace.
Precisely. It shows the product resonates, right? Especially as companies move more workloads to the cloud and need flexible databases. But, growth is one thing. The other piece, and maybe the most exciting part for the market right now, is the profitability story.
Ah, yes, the shift from growth at all costs.
Exactly. The CEO talked about meaningful margin outperformance and a real plan to drive profitable growth. And it's not just talk. Look at their non-GAAP income from operations. It hit $86.8 million. Remember, non-GAAP just gives a clearer view of core operational profit.
Okay, $86.8 million. How does that compare?
Well, a year ago, it was $52.5 million. Okay. So that's a pretty substantial jump in operational profitability.
Definitely.
But here's the number that really made people sit up. Free cash flow. Yeah. This is the actual cash the business generates, right? After all expenses and investments.
The bottom line, cash-wise.
Pretty much. Well, MongoDB generated a positive $69.9 million in free cash flow this quarter.
Positive $69.9 million.
Yep. And why is that so huge? Because a year ago, in the same quarter, they had negative free cash flow of $4.7 million. They were burning cash.
Wow, okay. That is a dramatic turnaround, from burning cash to generating almost $70 million.
It's massive. It tells you the business is maturing, it can fund itself, it's becoming sustainable. That pivot is absolutely critical for changing the investment narrative. It's not just growth anymore, it's profitable, sustainable growth.
Okay, so the numbers are undeniably strong. Atlas driving growth, record customer acquisition, and this huge swing to profitability and positive cash flow. So the big question then is, why? What's fueling all this? You mentioned the CEO, Dev Ittycheria. He gave a pretty direct answer, didn't he?
He did. He basically tied it straight to AI.
Right. He said, and I'm quoting here, "Many of our recently added customers are building AI applications, underscoring how our value proposition is resonating in the AI era and why MongoDB is emerging as a key component of the AI infrastructure stack."
Exactly. So it's not just a rising tide lifting all boats. He's saying they're becoming fundamental plumbing for AI development.
Okay. Key component of the AI infrastructure stack. That sounds pretty significant.
Yeah.
How are they actually doing that? Is it just marketing or is there substance there?
Well, it looks like there's real substance. They're backing it up with product innovation and strategic moves. For instance, they just unveiled new Voyage AI model.
Voyage AI.
Yeah, things like Voyage Context 3 and Re-Rank 2.5. Basically, these are tools designed to help AI applications better understand context and improve the relevance of search results when interacting with data stored in MongoDB.
Yeah.
Think better chatbots, smarter recommendations, that kind of thing.
Got it. So enhancing the AI capabilities directly linked to their database.
Precisely. And they're not doing it in isolation. They've been expanding partnerships too, like with LangChain, which for anyone listening who's into AI development, you'll know is a super popular framework for building apps with large language models.
Okay, so integrating with the tools developers are already using.
Right. Makes it easier for developers to just plug MongoDB into their AI workflows. They've also brought in other partners like Temporal for managing complex workflows and Galileo for ensuring AI data quality. It's about building out that ecosystem.
So it's the product itself plus the ecosystem around it.
And the core product features lend themselves well to AI, that flexible document model they're known for. It's great for handling the often messy, unstructured data that AI models thrive on. Plus, they've added capabilities like vector search. That's really important for finding similar data based on meaning, not just keywords, which is fundamental for a lot of AI tasks like semantic search or recommendation engines.
Okay, that makes sense. Flexible data model, vector search, ecosystem partnerships. It paints a picture of them really tailoring their offering for the AI era.
I think so. And it's not just about the commercial AI space either. They're making strategic moves elsewhere too.
Like what?
Well, they're seriously deepening their push into the public sector. They've committed to getting FedRAMP High and DoD Impact Level 5 authorizations for their Atlas for Government platform.
Okay, those sound like serious security clearances.
They are. Extremely rigorous standards. Getting those opens the door to handling much more sensitive government data, including Department of Defense stuff. It's a huge market and signals they can meet really demanding security needs.
Right, building trust with big, secure clients.
Exactly. And related to that, their Enterprise Advanced offering is now available in the AWS Marketplace, specifically for the U.S. intelligence community. Again, targeting very high security, specialized government sectors.
So building out capabilities for both cutting-edge AI startups and highly secure government agencies, that's quite a range.
It is. And then there's their developer outreach, those local events they run. These aren't just sales pitches. They're about educating developers, getting them hands-on with the tech.
Building the community.
Building the community, driving awareness, fostering that ecosystem. It all fits together. Improve the product for AI, make it secure for demanding clients, and educate the developers who will build on it. Feels like a pretty cohesive strategy.
It really does. Product, partnership, security, community, and that confidence, that strategy, it's not just reflected in the past quarter's results, is it? They backed it up with their look ahead.
Absolutely. That's often the most important signal for the market, not just what you did, but what you think you're going to do. And MongoDB significantly raised their guidance.
Okay, let's break that down. Because raised guidance, especially in this environment, gets a lot of attention. What are they projecting for the next quarter, Q3?
So for Q3, they're guiding revenue to between $587 million and $592 million. The midpoint there is about $589.5 million.
And how does that compare to what analysts were thinking?
Well, analysts were generally predicting something closer to $582 or $583 million.
Yeah.
So MongoDB's guidance is clearly higher than the street expected.
Okay, beating expectations again. What about earnings for Q3?
Same story. They're guiding for adjusted EPS between $0.76 and 7.89 per share. The consensus estimate was around $0.73. So another comfortable beat projected there.
All right, so strong Q3 expected, but they also updated the whole year, right? Fiscal 2026.
They did. And this is where the confidence really shows. They raised their full-year revenue guidance significantly. The new range is $2.34 billion to $2.36 billion.
And the old range?
The old range was $2.25 billion to $2.29 billion. So that's a substantial lift.
Yeah.
And it beats the consensus estimate, which was around $2.29 billion.
Okay, big jump in the full-year revenue outlook. What about full-year earnings?
Even more dramatic, arguably. The new guidance for adjusted EPS for the full fiscal year is $3.64 to $3.73 per share.
364 to 373. Wow. What was it before?
Before, it was $2.94 to $3.12. And the analyst consensus was sitting around $3.20.
Okay, so they blew past the old guidance and the consensus estimate for the full year's earnings. That is quite a statement.
It really is. And, consistently beating estimates is good, but raising future guidance, especially by this much, sends a really powerful signal. It tells the market that management isn't just seeing a one-off good quarter. They have strong visibility, they have confidence in their pipeline, and they believe the positive trends like Atlas growth, the customer ads, the AI traction, the profitability are sustainable.
Right. It suggests this isn't just a blip, but a real trajectory.
Exactly. It helps justify that strong stock reaction because it points toward continued outperformance, not just a temporary boost. It suggests the underlying business momentum is real and expected to continue. That's the kind of signal investors love to see, especially when there's been uncertainty around the sector.
Okay, so wrapping up our deep dive today, it feels like MongoDB's Q2 was more than just a good quarter. It was, well, kind of a statement quarter, wasn't it?
I think that's fair to say.
Yeah, you had that accelerating Atlas growth, driving strong subscription numbers, record customer acquisition, that huge, really important shift to profitability and positive free cash flow, and underpinning it all, a strategy that seems laser-focused on embedding MongoDB right into the core of the AI infrastructure stack.
And all reflected, as we just discussed, in that significantly raised forward guidance. That confidence factor is huge.
Yeah.
And what's really fascinating here, I think, is how it contrasts with the broader market narrative. There's been so much skepticism about whether software companies could really turn AI hype into, actual dollars and cents, especially profitable ones. MongoDB seems to be showing, yes, you can, at least if you're positioned as a fundamental part of that AI infrastructure. They seem to be demonstrating a clear path from AI integration to tangible financial returns and profitable growth.
Right.
So it leaves you with a pretty interesting question, doesn't it? Thinking about this, could MongoDB's playbook, focusing on that core product fit for AI, building the ecosystem, driving towards profitability, could that be a kind of blueprint for how other enterprise software players need to adapt to really capitalize on AI? Or is MongoDB just a unique case, maybe because of their specific database technology and market position?
That is a great question. Is this replicable or is MongoDB special? Definitely something for you, our listeners, to mull over. So what is this specific company's success signal about the broader enterprise software landscape and really the tangible impact of AI? Lots to think about there.